The Property Bulletin by London Property, the home of superprime.
Processing times at the Land Registry are improving, with all registration applications now handled within an average of 10.9 months. The organisation may still not have achieved its March 2025 target of processing 95% of applications within 12 months. Complex cases, such as first registrations, have also sped up. 45% are now completed within 10 months. However, many in the property sector say delays still disrupt transactions. Alex Robinson of Wright Hassel says it can still take months before an application is reviewed. It used to take up to 2 years. Things are better now, but long delays still make transactions more complicated and costly, she says. The backlog stems partly from post-COVID transaction surges and earlier staff cuts when the registry moved to a digital system, leading to lost experience. Straightforward applications now take 4 to 6 months, while complex ones continue to face bottlenecks. An expedited service exists for cases involving financial hardship or knock-on effects, with initial review in 10 working days, though completion times vary. Around 1,000 expedited cases are processed daily. Land agent Kevin Prince of Brown & Co. notes some recent quick wins. One title amendment came back in 3 weeks, but warns that even fast-track cases can hit the bollards near completion, delaying sales. More than 60% of applications trigger queries or requisitions, adding months to processing. The Land Registry says it's tackling this through better staff training and industry webinars. A spokesperson said improving speed remains the top priority. We're hiring, training and enhancing services. Output is at record levels and we're completing more cases than we're taking in. Customers should start to feel the benefits soon. You've saved, searched and finally found your dream home. But what if the real problem isn't the property, it's who lives next door? In a survey of UK homeowners, 64% said they've had issues with neighbours, and 1 in 10 admitted it got bad enough to involve the council. So, how can buyers protect themselves before signing on the dotted line? Experts say the first step is to look for visual clues. Neglected gardens, peeling paint and overflowing bins could hint at troublesome neighbours or poor upkeep. For those buying flats, check communal areas. Lots of prams or bikes may suggest student sharers or noisy families. You can also do a quick online check. Some councils publish noise complaint registers by postcode. Websites like police.uk show local crime data, and apps such as Nextdoor often reveal ongoing disputes or late-night party complaints. Then there's the human touch. Simply talk to the neighbours. It might feel awkward, but a short chat about parking or the local area can give you valuable insight into what life there is really like. Solicitors can also help by asking sellers about any disputes, which they're legally obliged to disclose. And it's smart to view the property at least twice, once during the week and again at night or on the weekend. Of course, there are no guarantees. Neighbours change, homes get rented out, and quiet streets can turn noisy overnight. But a little detective work before you buy could save you years of frustration and a lot of sleepless nights. Despite many landlords exiting the sector due to government policy, some are staying put, adapting and even expanding their portfolios. According to Steve Cox, Chief Commercial Officer at Fleet Mortgages, landlords remain remarkably resilient. While many tell surveys they're considering selling, in reality some are refining their strategies, not exiting the market. Fleet's latest rental barometer shows the sector's strength. Average rental yields have crept up a fraction, to 7.5%, up from 7.2% last year. The strongest returns are still in the North East, North West, Yorkshire and Humberside, and Wales, with yields of 8 to 9%. Average rents rose 3.2% in the last quarter, and some regions, like the West Midlands and the North East, saw annual rent growth above 20%. Far from retreating, professional landlords are becoming more sophisticated. 81% of new buy-to-let applications are now made through limited companies, a sign of growing professionalism and long-term thinking. Portfolio landlords are also expanding. Over 61% of applications now come from those owning 4 or more properties, and the number with 15 or more jumped sharply last quarter. Cox says this trend offers clear opportunities for mortgage advisors. Those who help landlords plan strategically, not just find their next deal, will build lasting relationships in a sector that continues to evolve rather than contract. The message? The data shows that some landlords aren't giving up, they're doubling down. Some of America's wealthiest business figures are quietly buying into one of London's most luxurious new addresses, the Peninsula Residences in Belgravia. The 5-star hotel and apartment complex, which opened in 2023 with sweeping views of Buckingham Palace and Hyde Park, has attracted an elite list of owners. According to Land Registry records and industry sources, Buyers include Blackstone boss Stephen Schwarzman, Citadel founder Ken Griffin, and WhatsApp's Jan Koum, whose combined net worth exceeds $130 billion. They've been joined by Todd Boehly, co-owner of Chelsea FC, former NFL team owner Dan Snyder, and AQR Capital's John Liu. The building features 20 residences, with the final 6 hitting the market this autumn, and amenities more akin to a palace than an apartment block. A 25-metre indoor pool with an ice cave-inspired ceiling, a chauffeured Rolls-Royce fleet, and even bespoke menus for residents' pets, designed by Peninsula chefs. Prices match the opulence. Schwarzman's flat reportedly cost £40 million, while Griffin's £100 million penthouse set a London record for price per square foot. Agents say US buyers have become the most influential group in prime central London. Many are drawn by Britain's stability, lifestyle, and the convenience of hotel living with full ownership. Applications for UK citizenship from US nationals have also surged, more than 4,000 in the first half of 2025, a record high and up 39% year-on-year. As one agent put it, for these buyers, London is no longer a base, it's a statement. If you ask people where they'd most like to live in London, Richmond upon Thames comes up a lot. Green parks, riverside walks, great schools, and that village feel you just don't get in most of the capital. But all of that charm comes at a price. According to the latest figures from the Office for National Statistics, Richmond's average private rent has jumped by £216 a month in the last year. That's more than 10% higher than in 2024. It's one of the fastest rent rises anywhere in the UK. Still, locals say it's worth every penny. Lauren Brown, who's lived in the area for years, calls it a dream place to live. She told reporters she'd gladly even pay more to stay because of the safety, the river, the dog walks, and the friendly community. Another resident, Maria, who rents with her 2 kids, said Richmond offers the best quality of life in London. Good schools, clean streets, and a real sense of calm. And you can see why. Richmond feels like a small town dropped inside a big city. You're minutes from central London, but surrounded by greenery and open space. Yes, it's pricey, but for many, the peace, beauty, and sense of belonging make Richmond worth the squeeze. London's property market might be cooling for some, but for wealthy investors from the Gulf, it's heating up. According to new research from Al Rayyan Bank, almost 1 in 3 high-net-worth investors across the Gulf Cooperation Council, that's Saudi Arabia, the UAE, Qatar, Kuwait, Bahrain, and Oman, bought property in London over the past year. The bank says 29% of GCC investors have added to their UK portfolios, targeting sectors like retail, hospitality, and student housing, areas they see as offering strong long-term returns. So what's driving the demand? Experts point to 3 main factors: the weak pound, which makes UK assets cheaper for dollar-linked investors, stable legal structures that protect ownership, and London's reputation as a safe global city with high rental yields. What's interesting this time round is how investment behaviour is changing. Gulf investors are no longer just snapping up luxury homes, they're diversifying into commercial and mixed-use developments, taking a more strategic portfolio-based approach. And as trade and mobility links between the UK and the Gulf continue to strengthen, analysts say London's status as a safe haven for Middle Eastern wealth looks stronger than ever. In short, London remains a go-to city for Gulf capital, just with smarter, more diversified bets.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.